What's going on, everybody? Stocks by the numbers, welcome back. Wanted to look at Nu Holdings, ticker symbol NU, listed here on the New York Stock Exchange. There's a company that I know a lot of younger people are talking about. This is a digital banking company out of South America, and they have clients in Brazil, Colombia, Mexico. And basically, as you see, the stock has been really ripping here for about the last 15 straight months. And their customers have been growing significantly well, quarter over quarter, year over year, and a lot of the other fundamentals obviously now are starting to get pumped up. Everything from the gross profit to the operating margins. So I wanted to take a look at this one because I'm sure if you got involved here at single digits, you're now sitting here with the stock as you see, 11.55, up 4 cents after hours, but down about 2 cents today. But I'm sure you're up big and you're probably pretty pumped about it. If we back out, we can see that we're practically back at IPO levels. And in the moment here, when we did have the IPO, I would say, in my opinion, that it was heavily overvalued. As you see, the first quarter came out, the company brought in, I mean, listen, they beat estimates by a really big margin there, over 37%. However, bringing in 600 million a quarter, and you just had an IPO, up here at 55 billion or whatever it was. So, in my opinion, I can actually appreciate the fact as to why it inevitably dropped, basically, no matter what the company was reporting, even though they were consistently beating on the revenue side. And you can see here, look at this, posting 1.2 on estimates of a billion, coming in at 1.3 on estimates of 1.23. I mean, a lot of these numbers have just been great. Look at this, very, very slight miss of 8 million, but estimates jumped up from sub 125 to above 1.45 billion, and they actually posted 1.45. And then after that, it was back to business as usual. Estimates maintaining basically about 1.4 billion. The company posts 1.6. Estimates jump up to above 1.7. The company posts 1.87 almost. 2 billion estimates, 2.13. And then, of course, as of last quarter, great beat here. Estimates staying above 2 billion and change. The company posts over 2.4 billion. So obviously the word is out and their customers are continuing to grow. And I believe right now they're at about maybe, I want to say 94 million customers. And they're expecting to break above that 100 million mark this year. And it's probably, in my opinion, going to happen sometime soon. But I just wanted to look at a couple of numbers and just a couple of trend lines here that I'm watching to see if, is this definitely a guaranteed buy? Well, of course, nothing's guaranteed, but you know what I mean. Is this like a pretty secure, stable buy here at about 11.5? Or could we potentially sell off a little bit? Maybe we can get it for like 10.5, 10.25. So let's see. In my opinion, I am expecting a little bit of a sell-off, but of course, we did just really go on a big run. So to say something like that, I really don't think I'm coming out of left field and saying anything you guys may not want to hear, but looking at these numbers, we have a market cap of a touch over 54 billion, and now we have a PE sitting here at 54.5. Now, I understand it's a digital bank, and, again, they've been growing like a weed, so I appreciate the fact that some of these numbers are a little overinflated here in the time being, but that's why I'm saying, in my opinion, we could just potentially take a breather. I'm expecting maybe like a 10-12% little sell-off here, staying inside of these channels, maybe coming to this support trend line. As you see, I drew this from... This was the bottom of January 6, 2023. Came up, it almost touches there, March 24th. And almost touches there as well, the beginning of January of this year. But I basically lined it up here with these bottoms, right? Because these are really the long-term bottoms, in my opinion. So I lined it up here, January 30th, 24, going into January 31st, 24. And you can see that for right now, this is basically the bottom of this upward channel that we've been in for the last 15 months, right? So in my opinion, I think it's a key level to watch. And also, even like when we looked at a stock like Coca-Cola or even Hershey as well, when we looked at these companies that were at, that were approaching these multi-year or all-time support trend lines, what happened? We had the flash drop going through August, September, October, right? We had that 3-month sell-off, and we had like that flash drop bringing everything down basically to a lot of their 5, 10, 20-year or all-time support trend lines. And then all the stocks bounced from there. All the major indices obviously started raging here for the last 6 months, and most of the stocks have been up and up and had very nice, healthy pullbacks to the support levels, and then had very strong bounces up here and rebounding and making new highs. You understand what I'm saying? So that's why, in my opinion, seeing a pullback like this, as you see, basically what it does is, especially in my opinion, if a company is fundamentally sound, what it does is it just sets up that bounce and that next leg higher, that next big rally. So even a situation like this, like, yeah, we're pulling into next quarter's earnings, right? So we're talking about roughly only the next 4 weeks, but we can easily just, kind of step down and consolidate in this channel. And then if everything goes according to plan and they beat again and they announce customers are up year over year, quarter over quarter, boom, then we jump up, right? We start running here into the mid high 12s, approaching the next fib levels, 12 and 3/4, 13 and change. Right? So, in my opinion, I actually think it might have to happen because it really did go on a tear here over these last couple of months. And technically, they did just miss slightly on the EPS side. In my opinion, not a massive red flag really in this situation. However, we are kind of rewarding companies when it did used to matter on the earnings side. And I was even looking at a stock like Oracle before, and I understand that revenue is chunking up nicely quarter over quarter, year over year, and demand is up, and they're forecasting bigger and better things down the road for the next 1, 2, 3 years. I can appreciate that. But if you actually look at the numbers of a stock like Oracle, that company missed revenue estimates 4 of the last 5 quarters. But the stock just continues to climb up and up and up as long as we just keep saying, oh, we have demand, we have demand, we have demand. And I'm sure they said that, 2 years ago, and now you're looking at these quarters and they're consistently missing their mark. So that's why sometimes I question the way that these companies lay out, the demand and the hype behind their product or their service, because if it really was there, I just personally feel that you'd be delivering more times than not. But I don't want to go off on a tangent. But again, technically a little slight miss here on the EPS side, but revenue, phenomenal beat there. And soon we may have $2.5 billion. But as you see, these estimates coming up here for May 14th right now, we're looking for EPS of a touch over 8 cents a share on the revenue side, just a touch below 2.18 billion. But the company is still forecasting growth, and like I said, apparently the average customer in Brazil, Colombia, Mexico, apparently this is now their go-to company, because obviously, again, the customers are up like several 100% over the last several years. So they're doing something right. But yeah, we do have a pretty high PE up here, in my opinion, above 50. But look at this EPS just climbing nicely here over the last several quarters. Again, looking to kind of just post the same estimate potentially of about 8 cents. So if the company is able to come in like 2.2 billion in change on growing customers, and somehow they're able to post like 8.5, 9 cents a share and come in above those EPS estimates, this is why I'm saying, in my opinion, it may be healthy for it to step down in this channel, touch this support line, beat those earnings, boom, pop up to the high 12s, potentially 13s. But look at this growth over the years. It really can't be denied here. 500 million in change, up to above 600 million in 2020. Now we come out of the lockdowns. Look at this revenue jump up now. Almost 1.4 billion for 21, over 3.7 billion for 22, and then almost doubling that, getting above 7 billion for 2023. And the net margin percentage sitting here for the year at almost 15%, clawing from negatives for 4 years in a row, and now boom, all of a sudden the margins look phenomenal across the board. Again, gross profit margin, operating margins, and we'll get to them in a second. But I just wanted to show that, in my opinion, we could potentially start stepping down here. And even from this last earnings, you can see we ran up, and now we've kind of been stepping down here. So we are potentially kind of trumpeting as well, right? We hit this high, and now you can see, like, I drew this top trend line across here, but, then we had the big chunk down, and we've been bouncing around. But if we connect these recent lows here, like I did, you can see that we're kind of in a big trumpet. But if we tighten up here, and we go from this high to the initial big drop here on Wednesday, March 27th, you can see that, for the most part, we're kind of in this downward orange. It is slightly a trumpet almost, in my opinion, but it does just look like a downward consolidating channel. This is why I'm saying, in my opinion, if we actually stay in here, we could potentially hit, again, something low here, maybe like a 1080. Or if markets do begin to sell off and they really want to chunk it down, of course, we could come down here and ride the bottom of this trend line. And if we extend this a little bit here, you'll see if this hypothetically meets up here with this longer term support trend line. Again, this is the 15-month rally that we've been on. This is the support trend line, in my opinion. So if we do meet up, let's just say we meet up right here where these lines intersect. As you see, it's about 10.5. It's about 10.5. So yeah, percentage wise, of course, it's a it's a little bit of a chunk, but realistically, it's really not a big deal in my opinion. If this stock goes from 11.5 down to 12.5, it to only shoot back up to 12.5, 13 a share, if and when they beat earnings in about 4 weeks. You understand? So in my opinion, I really don't look at that as a big deal, but it could very well happen. So I just wanted to lay out that level, but the financials here overall, we'll come back to the chart in a second, but the financials overall looking pretty good. I have seen the debt climb up. However, the company, I mean, look at the growth here of this free cash flow in the middle, going from sub 2 billion, slightly above 2 billion, 195 billion as of last quarter, jumps up to almost 6 billion. But also the cash on hand here looking really, really stable. The company every quarter, quarter over quarter, now has several billions of dollars in cash on hand. And the debt, though, the debt has essentially doubled here over the course of about the last 4 or 5 quarters, going from sub 606 million, and we can see now for last quarter 1.17 billion. However, I will say, I mean, if we call it like it is, the growth of the business, in my opinion, is seriously outpacing that growth of a couple of $100 million in debt. So that's why I really wouldn't view it as a red flag, in my opinion, but I did just want to mention it to you guys. But you can see, look at this growth in assets here, 25, 26 billion, up to the 30 billion mark, immediately getting to the mid 30s. Now we're above 43 billion in total assets for last quarter. Liabilities chunking up drastically as well, but basically they're slightly underperforming the growth of the assets on the liability side. And of course, total assets minus total liabilities yields total equity, and you can see the equity slightly inching up here quarter over quarter, but about 18 months ago, we were at 4.75 billion equity. Now we're at almost 6.5 billion equity. So this is what I mean. The company seems to be doing the right thing here, but the debt is slightly increasing. But we can see the book value per share as well, translating to little climbs here quarter over quarter, going from just above $1. Now we're sitting here at $1.34. So it doesn't seem like a big deal. However, if we look percentage wise, the book value technically is up about 33% over the course of about the last 18 months. So it seems like everything, in my opinion, does seem to be going according to plan. The revenue here more than doubling, as you see, going back to Q2 of 22 was about 900 million. Now we're above 2 billion here, bringing in a quarter. Cost of goods did not rise at the same rate. As you see, revenue more than doubled here, going from Q4 23 Q2, and I understand people want to look quarter over quarter sometimes, but I'm just talking spread out here over about these 18-month periods. But you can see going from 900 million to almost 2.2 billion, and look at the cost of goods, 465 million about up to about 685 million. So the revenue is up, we're talking what, like 120% maybe, and the cost of goods, as you see, is up, that is technically slightly less than 50%. But what gets affected more, as you see here, is the operating expenses, which has essentially doubled over the same period. However, total revenue minus cost of goods sold yields gross profit, and we can see gross profit went from 438 million up into the 5, 6, 8, over $1 billion, over 1.25 billion as of last quarter, 1.5 billion. So this is basically more than a triple, and we have operating expenses essentially doubling over the same period, in my opinion, right? So the way I'm looking at it personally, in my opinion, I think this is phenomenal growth. And we can see again now gross profit minus operating expenses yields operating income, and you can see we were negative, fought back positive, chunked back down negative, and now it's just been off to the races for the last couple of quarters here. Operating income jumping up to almost $250 million, and then above 300 million, above 400 million as of last quarter, 560 million, we'll call it. So this company really is growing nicely. And it's that type of business, right? We understand the way these banks and a lot of these financial institutions work. Right? I mean, the more customers you have, the more business you're going to do, the more transactions that are going to take place, and so on and so forth. And if you really do bring a great service and a product to the table, then obviously word of mouth is going to spread, and everyone's going to tell their friends, their family, their barber, right? They're going to tell everybody, hey, listen, I got this card, the Nu Holdings, boom, they send you this little purple card, and that's it. Now you got a new customer. So, in my opinion, it really does look good. But again, we went on a big run. We have a PE here of over 50, which for this situation may not be too drastic. But again, in my opinion, maybe looking for about a 10-12% sell-off here. Price to sales sitting a touch over 6. We've basically been bouncing between 5 and 7, so that's about middle of the road. Price to book now up here above 8.6. As you see, again, that's technically the highest it's been going back the last several quarters, but we have been raging this entire time. So that's why I'm saying a slight pullback might not be, I don't think I'm pulling that out of thin air, so to speak. But you can see even something like this, the enterprise value, which, sometimes we look at, but just a slight point here. You can see the enterprise value is about 13, 14, 15% lower than where the market cap currently is right now. It's at 48.6 billion. Market cap right now is about 54 billion. This is why I'm saying maybe a 10, 12% sell-off might be due here for this stock, in my opinion. But all of these return percentages are up very, very nicely. As you see, we're going from negative single digits, very low single digits, to mid single digits. Now we're up here basically doubling and tripling almost quarter over quarter. The gross margin percentage, of course, we looked at these numbers before, but you can see we were down here at sub 48.5%, up to 49, almost 60, getting above 60, almost 70. Slight pullback to about 67.5. Now we're above 68.5. So even when we have a slight pullback, it seems like basically within a quarter or so, the stock immediately is able to rebound a lot of these metrics. So that's why, in my opinion, I think it looks pretty solid here. I think it looks pretty stable. The operating margin, as you see, was slightly negative, got back positive, chunked back down almost minus 20%, and then immediately bounced back up here, getting to the high teens and then getting above the low 20 mark. Now, as of last quarter, above 25.6%. That is phenomenal growth, in my opinion, over these 18 months. EBITDA, again, earnings before interest, taxes, depreciation, amortization, as we see. Basically, same story, going down big negative and then immediately jumping back up here to the high teens, getting above this 20, and now as of last quarter, 26.4%. And the net margin percentage following along as well, going from big negative, jumping up to double digits, 14, 16, now 16.5% as of last quarter. Asset turnover climbing nicely. Look at that, from 0.13, now we're up to 0.19. It's about a 50% growth there. But again, we saw the liabilities going up as well, and we have the debt slightly trickling up, but we can see like the debt to assets 0.02 to 0.04 down to 0.03. So in my opinion, I don't think the debt will ever really get out of control just because the company seems to be very profitable right now, in my opinion. So they have pretty good cash flow. They're holding cash on hand. So I really don't know if they're going to have to borrow too much. Plus, I think they just got some funding, I believe, about 150 million in funding, I think. We'll check that out in a second, but you can see the debt to equity ratio has jumped up here. It doubled from 0.11 to 0.22, but it did just come down recently a chunk. So I really don't know if a lot of these are red flags, though, any potential negatives we're seeing in these metrics. But we can see EPS forecasted to slowly continue to climb over the next couple of quarters. We have revenue coming back to 218, but then we're going to climb from there, 233, 2.5, almost 2 3/4 here to close out 2024. So the growth really looks phenomenal. And you can see over the years what they're forecasting as well. This is what I mean. As they continue to provide the service for their customers and deliver, the customers are going to reward them. And this is why they're forecasting. Look at this. We're talking about like 30% growth here, year over year. That is absolutely nothing to sneeze at. Some of these smaller companies are looking for like 5, 6, 7% growth year over year. You understand? This company's looking for 30+% growth down the line. And then you have, you're going to have these chunks up here. Once we hit this mark right here, in my opinion, 25, 26, the stock is really going to take off. So we could slowly work our way up back to the 12s and the 13s, maybe even like 15 or something. But I think past 25, if they're actually able excuse me, too much coffee. If they're actually able to deliver these numbers, then in my opinion, we could easily be looking at like a $25, $30 stock down the road. And I know that seems extreme, but again, because we're seeing such consistent growth in both revenue and profits and operating margin and gross margin percentages and customers, that's what's really going to add, in my opinion, to the acceleration of the stock. So I do think down the road, if all of these numbers continue to stay the way they are, and of course, we don't find out that they're cooking these books or something. But in my opinion, if everything stays the way it is, I think we can easily see a $25, $30 stock, inside of the next maybe 2 years and change. I'll say maybe 2 to 3 years. And again, it seems like such a long time because we see how quick we can make money trading. However, if you really think about it, I mean, if I tell you a couple of years down the road, you may, double or potentially triple your investment. I mean, that's really not a bad return. And that's why I say, again, in my opinion, the bulk of your capital should be invested into companies that are growing nicely, that are financially sound, financially stable. If you want to roll the dice with some random small cap stock that's trending or something, it's entirely your own prerogative. But at the end of the day, in my opinion, I've seen that if you keep the big bulk of your capital in sound, stable, growing stocks over the years, it really appears to me, in my opinion, that that is the recipe to set yourself up to secure your financial future. But that's just my opinion. But company's been really consistent here. Look at this, going all the way back. We only missed on revenue that one quarter, and it was what, 8 million, basically a drop in the bucket, and then we came back and immediately started annihilating estimates after that. So that's why right now the company's looking really, really good. But again, technically, we did have a slight miss on the EPS side, so that's why I'm saying after this big run-up, if they did want to slightly begin to sell it off and pull it back down into this channel here to the mid-low tens, maybe even 10 and a quarter if possible, in my opinion, that would be not only healthy, but of course that would set any of you guys up for a potential entry. But we can see looking like about 10 and a half here, in my opinion. 10 and a half looks like a key level here, in my opinion. You can see that the stock was up, tried to maintain above that level. Then you can see, look, multiple rejections and closes right, and opens and closes, right at that 10 and a quarter level. Then you can see we break below it. We immediately get above it. But you can see that we opened right there at 10 and a quarter. We had a slight upward consolidation. Then we broke, but then right the next day you can see that we closed at 1024. You can see top left of the screen. So you can see these bounces looking like, again, open at 1025. We hit a high at 1026. Right? Next candle, open 1023. We hit a high 1026. We closed 1023. So that's why, in my opinion, we hit you had the big jump here bouncing off of this exact almost key level. And you can see we had a low of 1024 and then we spiked up to over 10 and 3/4. So in my opinion, that's why I'm saying I know it will technically break this longer term support level. But in my opinion, I think 10 and a quarter would be very, very ideal. However, if we would begin to step down here and the stock does drop to sub 11, but markets seem to remain pretty strong, then in my opinion, probably, like this 1080, 1070 level, in my opinion, if I had some liquidity on hand, I would potentially start to take a position or potentially even add right over there at around that time. But of course, it depends what markets are doing and how much we're selling off. But let's switch over here to stock charts very quickly. I'll let you guys go. We could see on the daily, the RSI was well above 70 at multiple points here during this whole run. And you can see it looks like a lot of traders basically waited for the pullback, sub 70 benchmark on the RSI, and then that's when they jumped in and bought that dip. And you can see it happened multiple times here, but as of late, it has been chunking down. This is the first time the stock has been below the mid-Bollinger Band since going back to February, and there was times, as you see here, coming out October, it had a really big run-up, and if you recall, markets were selling off, but you can see this stock went from, 7 to maybe almost 9 or high 8s here. But then after that, as our markets rebounded, you can see it chunked down and just kind of consolidated and flattened out along underneath, the mid-Bollinger Band before bouncing around, retesting, touching the bottom, having the Bollinger Bands tighten, and then boom, pops out and takes that next leg higher. And the reason why, in my opinion, it happened to pop up instead of down is because the company seems to be growing very nicely on the fundamental side. But we can see here 50-day moving average 1101, bottom Bollinger Band 1147, hit a low today 1143. So it looks like we're going to try to bounce off of this bottom Bollinger Band and hold this level, but as we kind of slowly come down and consolidate, that's what I mean. This bottom Bollinger Band will kind of begin to curl downward, potentially meet up with the 50-day moving average there, slightly above 11, and then of course we could have a potential break down to about 10 and a quarter, and you can see here again, very, very key zone here, in my opinion, at about 10 and a quarter. But even 10 and a half, in my opinion, which is basically the high of these candles of the range that I was personally looking at, even 10 and a half, in my opinion, would be a decent entry potentially. But RSI back middle of the road here at 48. You can see the MACD's really been pulling back, but again, it's basically been up and up and up for quite some time. So you do need some healthy pullbacks here, in my opinion. RSI on the weekly, as we see, looks like almost maybe about 85. Now we're sitting here right at the 70 benchmark. So this is why, even when you look at last time this happened, if it does, of course, past performance doesn't dictate future results. We all know this. But if we go back to June, July, August here, you can see RSI, basically same situation almost, was well above 70 for several months. And then we had the big drop, and you can see we dropped below the mid-Bollinger Band. We kind of hung out, flattened out for a couple of months, and then boom, we had the pop and took the next leg higher. So that's why I'm saying right now, in my opinion, we've been up above that 70 benchmark for several months. So now it could be time to potentially pull back, kind of flatten out there, maybe around like the 10 range, and then boom, we cross and take that next leg higher. Let's check the pivot points real quick, and I'll let you go. And here on the weekly, we can see, look at this previous support level here. Well, current support level, but previous resistance level here at 1034. That's why I'm saying I'm expecting probably, in my opinion, a pullback between 10.5 and 10.25. And of course, recently we have been pulling back, so that MACD kind of started to curl. However, you know, this is the weekly chart, so we could just over the next couple of weeks kind of come down and maybe meet up with it, not necessarily cross to the downside, and then we could curl and potentially bounce off of it if those earnings come out nicely again, in my opinion. But even here as well, looking at the daily, you can see 1111, 1101 here on the 50-day as well. So that's why, in my opinion, we may come down here, maybe flatten out, and then have a quick break. And we can also see the bottom second support level here at 1029. So that's why, in my opinion, I am expecting that 10.25 to 10.5 mark. But that's just my opinion. Obviously, I'm sure if you own it, you're going to say, oh, no, you're crazy. It's not going to pull back. It's going to 20. Believe me, I understand how you feel, because if I was a shareholder here over these months and I was just looking at the rate at which the customers were coming in, the rate at which the revenue and the profits were chunking up, I would absolutely 100% be on your side there. And I am, in my opinion. I am bullish. It does look good long term. And like I said, if they can keep up doing what they're doing and hit those marks that they're expecting for 2025, 2026, then in my opinion, it's only a matter of time, 25, 27, $30 a share. But as you see here, this was April 8th, secured a $150 million loan from U.S. International Development Finance Corporation. The new loan adds to $265 million financing New Bank's Columbia Union had secured last year with the International Finance Corporation, an investment vehicle for the World Bank. So it does seem like we're pushing into this digital age, and we're doing a lot of cryptocurrency and these digital assets, and everyone's doing all these digital payments and whatnot. So in my opinion, it seems like that's where more customers are going to lean to, just because of the seamlessness of it and the convenience of it. And technically, it's interesting because technically, I believe their fees are a little bit lower than, you know, something like a credit card. However, because now you're bringing in such volume of customers and transactions, the fees are really adding up to big dollars and cents in their pocket, in my opinion. So it looks pretty good. And fintech market size projected to grow over 882 billion by 2030. So that's what I mean. You know, if projections like this do come to fruition, then you're going to see a company like Nu just having their revenue and their customers just consistently keep climbing. Cathie Wood and also Warren Buffett have a small position in this stock, and it took place right after the company kind of went public. So they may be just kind of about back to break even. However, you know, I do have to give them credit because apparently, as we see, they kind of saw the writing on the wall. So got to give credit where credit's due. But I believe Berkshire, last article I looked at, has about 2.3% of these shares. So that's a good little chunk. But yeah, we have everyone pretty much bullish here. As you see, UBS adjust their price target from 11.5 up to 13.5, right? That's why I said, in my opinion, 13 really should be no issue if they beat earnings again. Maintains their buy rating. Continues to rise after earnings miss because, again, in my opinion, it's the growth in revenue here. Let's see, let's get into some of these numbers. Could look a bit overvalued. Company has a forward PE of 27. PayPal forward PE of over 15. In my opinion, PayPal, another company, I think overreaction. And I do think over time that stock will definitely rebound. Well, of course, I can't say definitely, but in my opinion, I would be a buyer of PayPal stock. Let's put it that way. Having a lower PE compared to SoFi, which has a forward PE of 126. Okay, very nice. Right, digital first bank founded in 2013, disrupting Latin banking system, which apparently it is. Customer growing rapidly. Bank had approximately 94 million customers in Brazil, Mexico, and Colombia. That's a 57% increase from the 54 million customers the bank had just 3 years ago. So that's what I'm saying. It seems like the word is spreading and everyone is just signing up and they want to be a customer. Bank expects to reach 100 million mark sometime this year as part of its long-term goal of being the largest customer platform in Latin America. And again, in my opinion, if those forecasts that they were laying out through 2025, 26, 27, if those forecasts do come to fruition, then this company may potentially become a powerhouse in the space inside of the next 3 to 5 years, in my opinion. Look at this, 2.4 billion, right? We looked at that. 57% year over year increase. EPS, again, slight miss, but it was 266% higher year over year. Company's gross margin also expanded to 47.5% in the quarter. Bank is projecting a 51% increase in earnings growth in the next 12 months. Less than original projection, but still strong. Okay. I just think, in my opinion, it is good sometimes to keep these projections a little bit more conservative because we are talking pretty big percentage jumps here. So don't want to bite off more than you can chew, so to speak, in my opinion. So it's price target at 950. Susquehanna reiterated positive rating, lifted price target to 12 from 11. This is what I mean. It seems like everyone's just seeing the writing on the wall, seeing the growth of this company, and now they're seeing how much it's translating to really how much revenue now they're chunking in quarter over quarter. So I just think everyone is just kind of bullish on this situation. Berkshire 2.3%. Kathy Wood 2.5 million shares. So, yeah, overall, it really does look good. There's that price target. Six-fold profit jump on client base growth. Let's see what this says real quick. Added nearly 5 million new customers. Net profit jumped up to almost 361 million. Though it missed the estimate. Come on, let's be serious. Return on equity, 23%. Yeah, that's crazy growth, man, in my opinion. Average monthly revenue per active customer grew 23%. There you go, loans overdue by 15 to 90 days, decreasing by 4%. Loans overdue more than 90 days remain stable, in line with expectations. Priorities now include working to, quote, win the game in Mexico, where a new bank is rapidly gaining market share. So it really seems like, sudden statement, also tap into the, quote, not yet fully explored opportunity in both unsecured and secured loans, as well as growing its market share in Brazil's high-income segment. So that's why I'm saying, in my opinion, I probably would be a buyer of this company, but I would just personally be looking for a little bit of a pullback here. And again, maybe like that 48 billion mark we were talking about. So 12, 13, 15%. 7 billion in revenue. And if we come back here, looking at the balance sheet, if we add up the equity, now we're at about 13.4 billion, and total debt 1.17. So if we subtract the debt, now we're at about 12.2 billion. We could say, quote unquote, maybe total positive value in the moment, equity and revenue, again, minus debt, and 12.2. If we give that a 4x, that'll be 48.8. And right now we're trading almost 8 times last year's revenue with a 54.5 PE. So yeah, I think 4x that number, coming down to about 48 billion in change, bringing that market cap down, giving them a quick little haircut before these earnings, in my opinion, would be healthy, would be justified, and it would really set them up for another pop if they beat earnings again. But it's just my opinion. But if you agree, disagree, if you like this stock, if you think it's overvalued, let us know down in the comments section. Of course, I'm going to end it there. So once again, Stocks by the Numbers, thank you for stopping by. Any questions or anything, drop it down in the comments. I'm pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand markets are rocky and volatile and uncertain. So I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day.